Welcome to the Finance Simplified podcast, where we break down complex financial concepts and provide practical tips to help you navigate the world of personal finance. Warren Buffett's investment firm, Berkshire Hathaway, has made significant investment moves in the third quarter despite recent controversy. Reports recently surfaced alleging that Buffett has been engaged in trades for personal gain, a claim adamantly denied by Charlie Munger, Buffett's right-hand man. Munger dismissed the allegations, re-emphasizing Buffett's unwavering commitment to ethical investment practices. Amidst the allegations, Berkshire Hathaway has maintained their investment activities. It made considerable strides in expanding its portfolio, adding SiriusXM and the Atlanta Braves, signifying a growing interest in both the media and entertainment industry and the sports sector. These acquisitions reveal Buffett's determination to diversify his holdings and seize promising opportunities. However, the firm has simultaneously reduced its positions in companies such as HP, Chevron, and Amazon, hinting at a potential shift in Buffett's assessment of these stocks. Despite the reductions, Berkshire Hathaway maintained its investments in Apple and Bank of America, underlining continued confidence in these establishments. Munger further clarified his stance on the accusations by robustly refuting a ProPublica report that suggested Buffett's involvement in unethical personal trading. He reiterated firm support for Buffett's reputation and underscored their collective devotion to regulatory and ethical standards. It is evident that Buffett and Munger continue to adapt their strategy in the investment landscape, whether it is through new acquisitions or readjustments to their portfolio. With the personal trading dispute in play, its effect on the long-term regard for Buffett and his firm is yet to be determined. As the story unfolds, investors and observers anticipate Berkshire Hathaway's upcoming decisions and will keep a keen eye on the performance of its new investments. Investment management giant BlackRock shows increasing interest in the digital asset market, highlighted by latest proposals to the U.S. Securities and Exchange Commission, SEC. The firm follows its previous application for a Bitcoin ETF with an application for an Ethereum exchange-traded fund, ETF. The proposed ETF, aiming to track Ethereum's price while offering investors exposure to the digital asset, could prove key in boosting ETH prices. Moreover, BlackRock has proposed listing the Ethereum ETF on the NASDAQ exchange. Their registration of the iShares Ethereum Trust in Delaware solidifies this step further into the digital asset market. Coinbase, the leading cryptocurrency exchange, is expected to act as the ETF's custodian. Alongside these moves in the crypto sector, BlackRock's long-term Municipal Advantage Trust has announced a 4-cent monthly dividend for its investors. Taken together, these developments underscore BlackRock's exploration and embrace of new investment opportunities, particularly in the burgeoning digital asset market. In recent Vanguard news, the Vanguard FTSE Canadian High Dividend Yield Index ETF, TSE, VDY, experienced a slight dip of 0.3% during midday trading on Thursday. Concurrently, Envestnet Asset Management Incorporated increased its stake in the Vanguard ESG International Stock ETF, indicating a growing sentiment towards this investment. Conversely, Berger Financial Group Incorporated trimmed their stake in the Vanguard Value ETF, possibly highlighting a shift in their investment strategy. These recent activities exemplify the dynamic nature of the Vanguard investment landscape and the continuous adjustments asset management companies make to optimize their portfolios. Stay tuned for more updates and analysis in the world of Vanguard investments. Binance, a leading global cryptocurrency exchange, has announced an exciting development for crypto enthusiasts in Thailand. The company is set to launch 2 new exchanges in the country. One will be launched in partnership with Gulf Innova, a subsidiary of Thai conglomerate Gulf Energy Development, with the aim to bring a regional crypto exchange, offering a platform for users to trade various cryptocurrencies. The partnership with Gulf Innova adds a strong local presence, making this an enticing opportunity for Thai crypto followers. In furtherance of its expansion in the country, Binance has also recently launched an invite-only exchange in collaboration with a billionaire investor, offering exclusive access to a selected group of users. This increased presence of Binance in Thailand adds to the intrigue and investment opportunities in cryptocurrencies for the locals. However, despite these promising advancements, there are constant concerns about scams and fraud in the rapidly emerging crypto space. Users are encouraged to exercise caution while investing in cryptocurrencies and stay aware of potential fraudulent activities. On another front, Binance USD, BUSD, a stablecoin issued by Binance and pegged to the US dollar, is gaining popularity in the realm of decentralized finance, DeFi. This stability has become critical for users utilizing DeFi protocols, which employ smart contracts to create decentralized financial applications. Looking ahead, Binance and Gulf Energy Development aim to establish a dedicated crypto exchange in Thailand by early 2024. The expertise of Gulf Innova's subsidiary and the vast resources of Gulf Energy Development promise great potential for strengthening the regional cryptocurrency industry. The partnerships and plans for expansion underline a significant step towards mainstream cryptocurrencies adoption in Thailand. However, vigilance against potential scams and fraud associated with the industry remains crucial for users. In our latest Coinbase news, South Korea's National Pension Service, NPS, has made an impressive 40% return on its investment in Coinbase stocks, marking a notable development in the crypto industry. This investment, made in the third quarter of this year, proved to be a fruitful decision, with the NPS securing a staggering profit from its $20 million investment in the popular cryptocurrency exchange. This venture into the virtual asset industry marks the NPS's first foray into the sector and reveals the growing interest and respect for cryptocurrencies as a valid investment opportunity among established financial institutions. This move by South Korea's largest investment group symbolizes the increasing acceptance and adoption of cryptocurrencies within institutional investors. It also raises the question of whether this will encourage more traditional financial bodies to delve into the crypto sector and discover the potential lucrative returns it offers. As the cryptocurrency market matures and amasses mainstream credibility, we expect to see more such news and developments. Keep an eye out for the latest updates from the realm of cryptocurrencies and the financial institutions that are etching their mark in this flourishing industry. The crypto journey continues. In the latest Bitcoin news, there is a spate of exciting developments. Currently, the price of Bitcoin is closing in on the $38,000 mark, largely thanks to anticipations surrounding the introduction of a spot ETF, exchange-traded fund, and the Federal Reserve's decision concerning interest rates. As a result, the demand for Bitcoin has markedly increased. Indeed, the cryptocurrency has rebounded 129% year-to-date, underscoring its resilience and striking growth. This trend, however, extends beyond Bitcoin. Cryptocurrency prices overall are on the rise, as investors eagerly await the regulatory approval of a Bitcoin ETF. This has led to a surge of interest in digital assets, consequentially bolstering the entire market. These strides in Bitcoin and the broader cryptocurrency environment signal growing mainstream acceptance and intrigue in the sphere of digital currency. Stay tuned for continuous updates on this dynamic market. In recent coinshares news, the digital asset investment firm has taken a significant step towards expanding its influence in the U.S. market through securing an exclusive option to acquire the crypto-focused exchange-traded funds, ETFs, of Valkyrie in the U.S. This move not only potentially enables coinshares to enter the US ETF market but also broadens its product offering while positioning it in a prime spot to benefit from the growing anticipation for a Bitcoin ETF. The exclusive option grants coinshares the right to purchase assets from Valkyrie's ETF unit, potentially leading to further expansion in the US market. The company plans to leverage this opportunity to tap into the increasing demand for digital assets, particularly Bitcoin and its potential ETF. In strategically acquiring Valkyrie's ETF unit, coinshares marks a key step towards establishing its presence in the US digital asset market. Alongside this expansion, the firm will closely monitor developments surrounding the potential approval of a Bitcoin ETF, which could substantially affect its future growth and market position. In related commerzbank news, the $536 billion banking titan recently acquired a crypto custody license in Germany, a significant stride as it becomes the first full-service German bank to do so. This new license will enable Commerzbank to offer secure storage and management of digital assets, providing crypto custody services not just for widely known cryptocurrencies such as Bitcoin and Ether, but other digital currencies including XRP and IOTA as well. Crypto custody services play a vital role for institutional and corporate clients, who are keen to invest in cryptocurrencies while ensuring the safety and security of their digital assets. By entering this niche, Commerzbank targets to meet the escalating demand from these clients, who seek a dependable and regulated financial institution to manage their crypto assets. This development is a testament to the growing acceptance and integration of cryptocurrencies within conventional financial systems. By extending crypto custody services, Commerzbank is proactively positioning itself at the forefront of this novel asset class, offering institutional investors a trusted pathway to the cryptocurrency market. On the whole, this announcement signifies a promising leap in the widespread acceptance of cryptocurrencies and exemplifies Commerzbank's commitment to innovation and addressing the ever-changing customer needs. In recent news from JpMorgan, one of the world's largest financial institutions, the company expects its digital currency, JPM coin, to process an impressive $10 billion in daily transactions in the upcoming year. This development underscores JP Morgan's belief in the potential of digital currencies and cements their influence as a significant entity in the fintech industry. While making strides in the digital currency space, JP Morgan is concurrently exploring innovative methods of managing financial assets. Recently, they trialed the use of avalanche blockchain technology to develop tokenized portfolios, demonstrating the company's commitment to utilizing pioneering technologies for a more effective management of financial assets. However, in another aspect of its operations, JP Morgan faced a minor setback. The shares of JP Morgan European Discovery, LONJET, experienced a slight decrease of 0.1% during midday trading on Thursday. Despite the drop being negligible, it's worth noting any market fluctuation in relation to JP Morgan's European operations. JP Morgan, therefore, has been active in maneuvering the rapidly changing world of finance and technology by taking significant strides while also encountering minor challenges. Stay tuned for more updates as JP Morgan continues to make headlines with its bold moves in the digital currency realm and search for new opportunities for enhancing financial asset management. In recent Consumer Financial Protection Bureau, CFPB, developments, the spotlight is on open banking regulation. This regulation aims to mandate financial institutions to share consumer data on request, a move possibly empowering individuals through easier access to their financial information while also fostering competition in the financial industry. Meanwhile, constitutionality of the CFPB's regulatory powers is being prominently questioned, even as the Bureau consistently releases new regulations. Doubts have been raised about potential unintended harm to consumers due to the continuous introduction of new regulations. It is yet to be determined how these concerns will be addressed and what changes, if any, will come about in the Bureau's operational methods. Accompanying these developments, a recent CFPB report has highlighted issues surrounding medical debt collection. This brings to the fore challenges consumers encounter when handling medical debts, underlining the need for enhanced protection in this area. These insights are crucial in understanding some key financial difficulties faced by individuals, and could potentially drive future policy changes. Keep yourself updated for more news relating to the CFPB and financial regulations of more such issues. In recent FBI news, 3 individuals have been arrested over their involvement in an elaborate multi-million-dollar cryptocurrency fraud scheme. The men stand accused of defrauding banks in the New York area and then laundering the illicit funds into various cryptocurrencies totaling $10 million. They reportedly manipulated the banking system and exploited these institutions' infrastructure and processes to carry out their fraudulent activities. Further complicating the case, the perpetrators used cryptocurrencies in an attempt to obscure their illegal activities and avoid detection by traditional banking systems. However, the FBI's unrelenting investigation proved successful in uncovering the scheme and making significant arrests. These efforts by the FBI play a pivotal role in protecting the financial integrity of the New York banking sector and serve as a marker of their ongoing commitment to battling sophisticated cybercrimes. As the Bureau continues to investigate and trace the flow of funds, it's clear their aim is to ensure full accountability for all parties implicated in the fraud. This case demonstrates the continually evolving nature of financial crimes, reinforcing the need for constant vigilance in the fields of cryptocurrency and banking security. In the latest Monetary Authority of Singapore, MAS, news, Singapore plans to pilot wholesale central bank digital currencies, CBDC, in 2024. As part of this initiative, Paxos and Straits have received in principle approval from the MAS to issue USD-backed stablecoins. In addition, a live wholesale CBDC for settlements trial will be carried out by Singapore's central bank. In a broader context, the MAS is spearheading several digital money initiatives, including the development of digital Singapore dollar infrastructure and enhancing the framework for digital money use through the expansion of wholesale CBDC pilots. In line with this, Singapore is collaborating with local banks for a live wholesale CBDC pilot and initiating tokenization pilots to explore the potential of tokenized assets. The latter project is a joint venture with Japan, the United Kingdom, and Switzerland. Interestingly, Ravi Menon, the managing director of the MAS, has voiced his position on cryptocurrencies, asserting their failure as digital money and proposing other forms for the future of electronic fiat. On a global scale, the MAS is promoting the use of tokenized assets and has announced a global tokenization initiative. This involves a partnership with BNY Mellon, DBS, JP Morgan, and MUFG, aiming to streamline the exchange of tokenized assets across borders. Keep an eye out for more updates on how the MAS navigates the evolving landscape of digital currencies and financial innovation in their upcoming news. The New York finance regulator, NYDFS, is taking strides towards safeguarding investors in the cryptocurrency space by issuing stricter guidelines for the listing and delisting of tokens on crypto exchanges. With this move, the NYFS aims to enhance investor protection, tighten the crypto listing guidance, and maintain the integrity of the fast-evolving cryptocurrency market. By ensuring only qualified and reliable tokens are listed, these regulations aim to create a safer trading environment, instilling greater confidence in investors when dealing with cryptocurrencies and their trading platforms. It's therefore essential for crypto exchanges to adhere to these newly introduced regulations for the appropriate listing and delisting of tokens, reflecting the increasing significance of regulatory oversight in the cryptocurrency industry. In summary, these latest NYFS guidelines are a crucial step toward ensuring investor protection and maintaining market stability in the dynamic world of cryptocurrencies. In the latest SEC news, the U.S. Securities and Exchange Commission, SEC, has decided to postpone decisions on Bitcoin and Ethereum exchange-traded funds, ETFs, until 2024. This includes delays on reviews of applications for Hashdex Spot Bitcoin ETF, Grayscale Ether Futures ETF, Hashdex, and Grayscale Ethereum Futures ETFs. The consequent uncertainty surrounding the regulatory framework for cryptocurrency ETFs continues to leave investors in limbo about the future. The SEC has, however, had a successful fiscal year in 2023, demonstrating its enforcement actions commitment in the realm of cryptocurrencies. As part of its battle against fraudulent activities, U.S. regulators have vehemently trailed criminals, thus ensuring the market integrity and the protection of its investors. Meanwhile, these delays in the ETF decisions have caused significant impacts on the market. For instance, the potential delay in decisions regarding BTC ETFs resulted in long liquidations worth $160 million, leading to a downturn in the cryptocurrency market. The SEC has also expressed its intent to interrogate Tesla CEO, Elon Musk, amidst a Twitter takeover probe. This request underscores the heightened scrutiny level on influential figures and their impact on the crypto market. We'll continue to bring more updates on the evolving regulatory landscape of cryptocurrencies, following the SEC's activities. Stay tuned. In recent Federal Reserve news, the dollar experienced its largest drop in a year but has since made a rebound, amid uncertain times as the potential for Federal Reserve rate cuts looms. Despite this volatility, it's important to note that the Federal Reserve has successfully managed inflation within the U.S. economy. However, growing concerns have been expressed by the Fed Vice Chair about the increasing leverage of hedge funds in treasuries. This situation underscores the potential risks posed by hedge funds to market stability. Turning to the stock market, the recent rally fueled by hopes of rate cuts has begun to recede. This has resulted in a decline in stock values, signaling that investor confidence could be shaky and that the future remains indeterminate. This concludes our update on the latest developments in Federal Reserve news. Please stay tuned for further details on these unfolding stories. In recent news from the Reserve Bank of India (RBI), the central bank has tightened consumer lending rules, a move which led to a 1% decline in both the Nifty Bank and Nifty Financial Services Index. This decision of stricter regulations is aimed at promoting responsible lending practices and reducing risks of loan defaults. In a related development, the RBI has also raised the risk weights for commercial banks' consumer credit exposure. This step further underscores the bank's commitment to fortifying the financial system against potential default risks in the consumer credit sector, in line with its aim of ensuring the sector's stability. Additionally, the RBI is encouraging sustainable investments by offering sovereign green bonds to non-resident Indians, NRIs. These bonds provide NRIs with the opportunity to support socially responsible projects in India, while also gaining credit risk-free returns in the long run. Furthermore, according to the RBI's most recent monthly bulletin, the central bank sold a net total of $1.51 billion in the spot forex market in September, reflecting its ongoing efforts to manage the foreign exchange market and stabilize the exchange rate. Stay tuned for further updates and insights on these and other developments shaping the Indian economy and its financial sector as part of our ongoing Reserve Bank of India coverage. In the latest news from Morgan Stanley, the financial titan is facing a hefty $6.5 million fine for mishandling customer personal data during the disposal of its computers. This incident has raised serious concerns about the firm's handling of sensitive information, underlining the importance of data security and privacy. Compromised customer data can have severe repercussions. Despite this, Morgan Stanley's CEO has expressed confidence in the company's continued compliance with Basel III regulations. Basel III is a global directive designed to bolster bank capital requirements and fortify risk management. Adherence to these standards is of utmost importance for financial institutions to ensure stability, augment transparency, and safeguard against potential financial crises. In related economic developments, the Federal Reserve's recent measures are predicted to potentially drive the U.S. inflation rate to 2 to 3%, according to some economists and analysts. An uptick in inflation can have wide-ranging effects on the economy, including impacts on pricing, investments, and consumer sentiment. In summary, the issues at Morgan Stanley encompass a substantial fine due to compromised customer data during the disposal of its computers and a confident stance in regard to adherence to Basel III guidelines. Simultaneously, actions from the Federal Reserve could potentially instigate a 2 to 3% inflation rise in the U.S., creating possible risks for the economy at large. In recent NASDAQ updates, we draw attention to analyst recommendations and changes in short interest for certain companies. To begin, Eterna Therapeutics Incorporated, NASDAQ, ERNA, experienced a significant surge in short interest during October, hinting at an increased bearish sentiment. Contrarily, Intuit Incorporated has been conferred a moderate buy recommendation by analysts, reflecting their positive outlook on the company's prospects. Methanex Company, NASDAQ, MEOH, has received a similar moderate buy recommendation, suggesting potential for moderate growth. Increasing short interest is also visible for Henry Schein Incorporated, NASDAQ, SIC, and Arrowroot Acquisition Corporation, NASDAQ, ARRW, escalating by 10.2% and 6.8% respectively during October, indicative of a pessimistic investor sentiment. Meanwhile, New Fortress Energy Incorporated, NASDAQ, NFE, has been given a moderate buy recommendation by analysts suggestive of their anticipation of a favorable performance from the company. Finally, Skillful Craftsman Education Technology, NASDAQ, EDTK, experienced a downturn with its shares dropping 8.4% during Thursday's midday trading, the reasons for which can be attributed to several influencing factors. This concludes our summary of the recent affairs in the NASDAQ market. Keep an eye out for more financial and business updates. In the latest NYSE news, there have been noteworthy shifts in short interest during October. James Hardie Industries plc, NYSE, JHX, and Albany International Corporation, NYSE, AIN, observed a significant rise in short interest by 14.2% and 14.5% respectively. In the housing sector, KB Home also experienced a 10.2% growth in short interest. Interestingly, Callon Petroleum saw a decrease in short interest during the same period, potentially indicating a shift in market sentiment towards the company. Regarding analyst ratings, CNH Industrial and Reinsurance Group of America, Incorporated, RGA, have both received a consensus rating of moderate buy, reflecting positive expectations for these companies. Similarly, analysts have recommended Performance Food Group, PFGC, as a moderate buy. In other developments, Fifshop shares experienced a significant upsurge after reporting better than expected earnings, enhancing their positive momentum. On the partnership front, the Abu Dhabi Securities Exchange, ADX, and the NYSE have entered into a Memorandum of Understanding, MO, for business collaboration. The partnership will look at opportunities for dual listings and new product developments to improve their offerings. Regulatory news reveals that the New York Department of Financial Services, NYFS, has implemented stricter rules for cryptocurrency listing and delisting in an effort to protect investors in the rapidly developing digital asset environment. Stay tuned for further updates in the NYSE news. In a groundbreaking move in the digital finance sector, the Philippines has become the first country to sell $179 million in tokenized treasury bonds, revolutionizing its financial market. This significant step is aimed at expanding the domestic debt market and attracting a wider range of investors by enhancing accessibility to government securities. The government's plan involves the sale of these tokenized treasury bonds backed by the country's economic assets, with a minimum target of 10 billion pesos. This tokenization process will divide the bonds into smaller units, thereby increasing their appeal to retail investors. Replacing the traditional auction of treasury bonds with a digital approach, the Philippines projects to raise approximately $179 million through this initiative. Embracing digital finance and tokenization exhibits the country's commitment to modernizing its financial sector, leveraging technology to strengthen the economy, and creating increased investment opportunities. This unprecedented sale of tokenized treasury bonds augurs well for future advancements in digital finance in the Philippines, underlining the country's potential as a hub for innovative financial solutions. Stay tuned for more updates in the realm of Philippines news. Thank you for tuning in to this episode where we explored the fascinating world of finance, providing valuable insights and practical tips to help you navigate the intricacies of money management and achieve financial success.